into starting with understanding the investors that you want to attract, right? You kind of have to have a plan in place. And that's something we focus in on, right? I think one of the big things that we do that may be different from what most other operators do is we really, I mean, I have the marketing background, so we do focus on marketing. And for us, the marketing isn't necessarily just the promotional aspect and the stuff that you see. There's another side to it where we try to really understand how do we add value.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke. And today we have John Casmon. John is the founder of Casmon Capital Group, a multifamily investment firm in Cincinnati. Casmon Capital helps families invest in multifamily apartments to create generational wealth and impact. He's also the host of Target Market Insights podcast and the co-founder of the Midwest Real Estate Networking Summit. John, thank you so much for joining us on the show. And how are you?
I'm good, Dwayne. Thank you for having me on.
I really appreciate you taking the time with us. I know you're very busy doing a lot of big things. But the last time we had spoke on the phone, probably about 30 minutes, the big takeaway that I got from the conversation is that you always looking to help others, share your information and knowledge. So I really appreciate you taking some time with us today to kind of go over some of your business expertise on the syndication side, as well as investing in brand building as well. For people who are not familiar with your background, would you mind sharing for the audience how you got started in real estate and a little bit about your company?
Yeah. So, I mean, the short story is, I've always been interested in real estate. I read Rich Dad, Poor Dad when I was in college or shortly after college. And that concept of, the four quadrants and kind of moving over to more of being an investor or business owner always made a ton of sense for me, but didn't quite know how to start, right? So like most people went through, after graduating, kind of got a corporate job, worked in marketing, worked for an advertising agency. Actually got hired by my client, which was General Motors at the time. So I was there for a few years. And it happened to be the time that coincided with the last recession. So, went through a lot of stuff there. But for me, it was scary. And obviously being a younger person in my career, didn't fully have the context that maybe some of my colleagues had who had invested 20, 30 years into this company just to be let go and not really have other options as far as what they were going to do. So my big takeaway was, I didn't want to commit to a company, no matter how good of a company it was. I didn't want to commit my career, my life to it, only to have them decide my fate down the road. So, for me at that moment, part of what I want to do is open up my options and figure out how else can I create income that can replace my salary, and it can do it over time. So it's not a huge rush, but I never wanted to wake up 5 years, 10 years, 20 years later, where someone else is telling me they no longer need me. And I don't really have my backup plan or any other options in place. So at that moment, I really started to look more into real estate. I moved to Chicago in 2011 and working for an advertising agency. And then at that time, I started investing kind of on the side. So I started with the duplex. We house hacked, lived in one unit, rented out the other unit, and that worked extremely well. From there, we bought a 3-unit building, about an 8-unit building, and 2 years later, and then got into a couple flip projects. But ultimately, what became really clear was all of my money was tied up into the properties that we had. So I wasn't, while we had some cash flow coming in, I had a lot of equity in these properties, and it started to make sense to say, well, how else can we build this where I'm not saving such large sums of money to invest, but actually partnering with others? Because other people were coming to me saying, dude, I would love to, buy some properties and do what you're doing. I just don't know how, or I don't have the time to do it, or I don't want to be a landlord. So at that moment, it's kind of clicked to say, well, listen, I kind of have a need. You guys have a need. We actually can mesh and help each other. Why don't we start partnering together, working with these investors to buy these properties? It gives us more flexibility to go out and really focus in on this. And since then, we focus more on acquiring larger properties that give us more cash flow as well as more upside potential.
Mm. As far as kind of your vertical structure of your business, Casmon Capital, how does, what are can you explain the two verticals that you have for the audience?
Yeah, so there's two sides to it. One is where we own and operate our own properties, where we'll go out, we'll find them, we'll own, we'll manage, and we kind of take just consider it like a car, right? So we're in the driver's seat on those deals. Those can either be JVs or syndication deals, and then the other side are where we partner with other operators. So for us, we were in Chicago for a long time. We just moved to Cincinnati a couple months ago, and Chicago is a great city. Love the culture there. Lots to do, not exactly the friendliest place to invest in multifamily properties, right? So especially large, real large multifamily properties. So we started to look elsewhere to see where we could get some scale. And if you take a look at some of the key metrics we look for, which are growth and ease of doing business, a lot of that growth is taking place in the south, the southeast, and even some of the areas in the west coast. So we started to look to partner with operators in those markets so we can kind of get those advantages of being in high growth areas and continue to provide those opportunities for our investors.
As far as kind of I know, so you talked about kind of the markets there. Um, what would you say, kind of like, is there a specific target property that you guys are looking for? Can you kind of explain, is it like BC? Is it more rehab intensive? Or are you guys kind of looking for something that's more managerial that you guys can turn around and kind of take it to scale?
Yeah, we focus on value add properties. So the way we determine value add is taking a look at something that is already, I'm going to use the word stable, but what that means is it's 85% or more occupied. So there's people living there, there are people who are paying rent, and we can cover it. We prefer 90%. Mainly because the banks prefer 90%, but if it's 85%, we can make it work as well, right? But we want a property that's already performing, and then from there there's an opportunity for us to increase the value. So that could be anything from improving the interior units to drive up rents. That could be managerial efficiencies, so maybe they're not collecting rents, or maybe there are some inefficiencies on the staffing plan, or other things that we feel like we can come in and we can execute better. So we look at the value at plays. We're looking at Class B and Class C properties. I prefer B to C plus, and we like Class B, Class A, and I will say C plus neighborhoods. That's as low as we really want to go. But we're looking for opportunities where they're desirable neighborhoods, desirable communities, where we believe that there's some growth potential in the future based on what we see today.
Nice. As far as like deal flow, how are you guys, finding deals? Is it primarily through brokers? Or are you guys doing any kind of mail or direct to seller marketing campaigns?
So we're focused on larger properties, right? Most of our properties are 100 units and up. So with that said, a lot of these owners are either groups and they're extremely sophisticated. So you sending a direct mail letter to someone who has a $10 million property, they're probably not going to sell to you
Yeah, it's
based
very
on
tough.
that,
Yeah.
right? I mean, they're very sophisticated. They understand the value of their properties, and it really comes down to them feeling trust with whoever they end up selling with. So a lot of times they do go to the brokers. What I will say is it's not a bad idea to start building some relationships, but ultimately the brokers are going to be the people who really own those. There's only a finite number of large number of apartment buildings, and you can believe that the brokers are all fighting over each other to build those relationships with those owners right now so they can get the listing. So it's going to be much easier to understand what's happening by developing a broker relationship than trying to go directly to seller. Don't get me wrong, you can, but you probably need something very compelling if you're going to go that direction versus just working with a broker directly.
Nice. As far as kind of like the other side of the business, of course, looking at deals, looking at opportunities, but finding the investors. What would you say kind of some of your primary sources for getting potential investors into your fold?
Yeah, great question. So, I mean, our investors come from a lot of the different activities we do, right? I wish there was like one silver bullet I could tell you is like, nope, I just do this and they flock. It's not
Hmm.
quite how it works, right? Ultimately, the investors, they want to get to know you. Anybody who's going to do business with you, they want to get to know you. They want to know who you are. They want to know the way you think. They want to know the way you operate. They want to understand, your business and just who you are as an individual. So I think for us, if I look at our investor database, most of them come from either some of the marketing activities we do. A good chunk come from kind of relationships I've had prior to, telling the world that we were investing in multifamily. Some have come from being a guest on podcasts like this. So it kind of just depends. But I would say, from some of the activities we do, we have our podcast, Target Market Insights. So certainly we get some investors from that show. We host a meetup, Chicago Multifamily Club. So I actually still commute back to Chicago for that event. We have our summit, the Midwest Real Estate Networking Summit. So we just definitely come across investors in all different likes, but some folks also just come to our website and reach out. They'll review the information there and they'll reach out. We'll get on a phone call and we'll go from there.
Are you guys doing any like social media? I know, of course, podcasting and putting it out there, but is there any specific stuff that you guys are doing that you find pretty effective for you guys?
Yeah, I mean, social media is good. And, there's a lot of different platforms there. So I think ultimately it comes down to starting with understanding the investors that you want to attract, right? You kind of have to have a plan in place. And that's something we focus in on, right? I think one of the big things that we do that may be different from what most other operators do is I mean, I have the marketing background. So we do focus on marketing. And for us, the marketing isn't necessarily just the promotional aspect and the stuff that you see. There's another side to it where we try to really understand how do we add value to that investor. And that could be a host of investors, right? Some of your listeners maybe are more in the commercial space. Maybe they're triple net investors, or they are business owners who invested in different franchises or car washes or whatever, right? So for them, it's going to be a little bit different than the person who works the corporate 9 to 5 job. And ultimately, it comes down to understanding what questions they have, what things they need, because sometimes they don't know.
Hmm.
For instance, I'll give you an example. One thing that I've been telling people, and I've been like, pounding my chest, is that if you are a business owner, and that's any business, if you receive K1 distributions from any business activity, then you should seriously consider investing in commercial properties, especially those that have depreciation and bonus depreciation with physical assets. So for us, that's multifamily. There's other properties that you can do this with as well. But the reason for that is you can take those losses, those paper losses, and use that to offset any of your passive income gains. So that's a great strategy that I think a lot of investors should be using to add it to their arsenal. Even if you don't care about multifamily investing, this is a phenomenal tool to lower your taxes. And who doesn't want to keep more of their own money? Right. I
Hmm.
mean, that's the whole point. You work, you want to keep more of your own money. So it's a great tool to think about. Right. So, from a marketing standpoint, it's understanding the psyche of the individual first and foremost, and then really retrofitting or building a plan based on driving those connections with those individuals.
Yeah, I like that a lot. Yeah, just kind of breaking it down exactly what those particular people would need, and then providing that specific content. You had mentioned briefly about meetups. You guys do like a local meetup? How often do you guys meet? Do you guys bring guests? And kind of what's your format?
So we do a meetup monthly in Chicago. So I'm actually looking to add one in Cincinnati very soon. It's going to be a different format. But in Chicago, we have speakers. So once a month, we'll all get together. We have networking. We'll bring in a special speaker where we'll talk about a specific topic. And we try to engage our group. We make sure we share the video with folks on Facebook in our private Facebook group who maybe couldn't make it. We have over 500. I think we have like 600 or 700 people now in our group. So we get about 50 to 70 people for
Wow.
each group. So that's a pretty good group size. But obviously, still that's like 10% of the people who are in our database. So we try to make sure we find ways to continue to engage the rest of those folks as well.
Nice. I know you said been doing these meetups for quite a while. Do you kind of remember like your first one? Like, how did it feel when you first started it up?
Yeah, I mean the first one, I didn't really know what to expect, right? You didn't know if people were going to show up or how many people were going to show up. And it was good. I think we had like 10 or 12 people for the first one. We didn't really have as much of a structure at that time. We had speakers. I think we were always doing speakers. Um, but we didn't have, let me think. I don't think we had a speaker at that first one. We did not have a speaker at the first one. And it was more just pure networking. There really wasn't an agenda.
Hmm.
And I think that there's some value in that. But, you know, for me personally, it's tough to just jump in a room and just turn into the social butterfly. It's not my natural
Mm,
comfort zone, right? So what helps is having a bit of an agenda, warming people up, getting them to the point where they can ask specific questions, or if they're looking for something specific, they can identify that. So part of what we like to do is go around the room. We're smaller. It's kind of tough now because it's so big, but when we were smaller, we would go around the room and we would say one by one what your name is, talk about your current portfolio, what you're working on, and why you came out tonight. What are you looking for? Because everyone, if you come to a meetup, you spend the time to physically get in your car, you're sacrificing that time doing something. I'm sure you care to do better in the evenings than sit around with a bunch of
mhm,
investors. You're doing it for a reason, right? You're either trying to network with brokers to find deals, or you're looking for investors, or you're looking for a contractor, or whatever, right? You're trying to find a new property manager, but you're hoping to build a connection that can elevate your business and move it forward. So we talked to people about what that was, and we would try to align them with other folks either in the room or in the group or in the network in general. So I mean, part of it is like, you came out for a reason. I want you to leave here with great value and feeling like it was worth your time. And ultimately, that is the core principle of the meetup for me, is you came out for a reason. I want to make sure it's worth your time. So we try to make sure we structure it in a way we can deliver on that promise. And I haven't verbalized this promise, but to myself, that's my approach with the meetup every time.
yeah, that's very smart. And then kind of transitioning that to now the larger meetup of the networking summit. Is this your, how many years have you been doing that?
So we did the second one this past June. We are well on in the way, planning number three here for next May, and it's been a phenomenal platform to connect with investors. And again, it is about networking, so it's all about bringing people together to build relationships and ultimately elevate their business. So if you think about what a meetup does, and the folks who come to that, think about committing to 2 full days of connecting with other high energy, profiled individuals who are looking to accelerate their business. And I'm fortunate because I have a great partner on that. My partner Bree she is more of a social butterfly, so she has a ton of connections. I have my connections, so we can bring in some of the best speakers from across the country, and those folks who are very knowledgeable in various tasks, various spaces, whether it be from fixing fix and flips to wholesaling to syndication to other aspects of investing. We can tap into the right minds to cultivate an experience that helps to drive people forward.
Yeah, it's very impressive when I saw the pictures and like, it was like a huge event. And I'm like, this is very impressive, especially for the second year.
Yeah.
What was kind of involved in putting something like that together? Like, I know there's a lot of different moving parts. I know you have your partner helping out, but like, what was, the experience of putting something like that together?
Well, I mean, my background is in marketing, right? So I did a lot of experiential marketing. I've done various large events. So I've worked New Year's Eve Times Square, in the Pontiac days. So I've done a bunch of different stuff in the event space. So for me, it was organized chaos that made me feel very comfortable.
Mm,
But in short, I mean, to answer your question, I mean, there's a lot of it, right? I mean, think about planning a wedding or planning any other event. There's a lot of logistics there, a lot of people you've got to get together. I think one of the challenges is to figure out what takeaway you want the guests to have. Because ours is a real estate event and not a multifamily event, for instance.
mm,
It's how do you make sure it's broad enough to engage the person who may not have an interest in large commercial investing. Maybe it's someone starting out and they just want to wholesale. How do I make sure that they get the value and it's not so, advanced that, it's not worthwhile for them? Then also on the flip side of that equation, for that person who already has $100 million portfolio, how do I make sure that there's enough value in the event for them, so it's not so elementary or a novice level, that they get the value out of that experience, right? So that was the hardest thing, was how do you create a platform with content where it's valuable for both the beginner as well as that advanced investor. So that was probably the most challenging piece to it. It's always a bit of a challenge, but I think we do a really good job of walking that tightrope and making sure that all of our speakers have the ability to bring the listener and bring the guest through from beginner level up through the more advanced and experienced levels.
very nice, very nice. Like that a lot. How do you kind of balance it all? I know you got the investment side of the business. You're doing the podcasting, doing this. I know not one man as an island? Do you kind of have like a small team, or do you have any virtual assistants? Like, how do you kind of put your operation together?
Yeah, I have a VA that helps me with certain aspects. So she's I try to do some VAs out of the country with varying success. So I have one who's actually local in the United States here, and she's helpful. So she kind of helps me with some of the marketing stuff. So I kind of come up more with the strategy. She kind of helps me with the execution of it. And then we're continuing to grow. So we actually just brought on another partner who can help us with some of our outreach materials. So we're always looking to grow and figure out how do we best expand the business. We also have some folks who have been very gracious in helping us when it comes to things like underwriting deals and just helping us with other aspects of the business. And we have some great relationships. I mean, I've been a giving person. I love giving, and I do believe that if you give enough, that you will get some stuff in return. So I don't really think about it too much from that perspective. But on the same note, we have a pretty good team that some of them are paid and they work for us directly, and some of them are more so interning, I guess, in a way where they're supporting us and helping us, but obviously they have other needs and other time demands besides the stuff that we're doing.
Nice. I was kind of moving on to talk about your podcast platform, Target Market Insights. I know you guys have a whole bunch of great guests talking about a whole bunch of different topics. I love the flow of it, kind of the whole setup and everything. I know that you did some changes to it, so now you guys are posting now twice a week. Can you kind of tell us what listeners can expect to hear on the kind of the second episode of the week, and kind of what they can kind of get out of that whole show?
Yeah, absolutely. So the show is really, when I launched it, it's focused on market research. So the show is really kind of evolving from just the research aspect to marketing holistically. So it's market research, marketing, branding, kind of the whole gambit, all rooted in multifamily. So the way the show is laying out now is really that first episode of the week on Tuesdays is more multifamily centric. And then that Friday episode is going to be a bit more marketing or branding specific. Now, sometimes they will mesh, sometimes they'll both be multifamily specific, sometimes they'll both be marketing, but generally speaking, that Friday episode will lean a little bit more heavily in the marketing space.
Wow. Yeah, that's awesome. Yeah, like I said, I recommend everyone to take check out that show. It's very good. Again, like I said, great guests, and kind of your whole format of the show is really good. Kind of touching on kind of a little personal, so people kind of get a little bit know more about you. Kind of, what do you have any specific morning routines or kind of things that you do to kind of get you going?
Yeah, I mean, so the first thing I do is I get out of bed and I do a set number of push-ups. So every week I take it up by one number. So right now I'm at 38. So I do 38 push-ups every day. Oh, you know what? I was supposed to bump this up this week. I got to go to 39. I forgot.
Yeah, you got
All
to
right, so
double up.
I got to take it to 39. So I do push-ups the first thing out of bed, like literally wake up, hit the ground, push-ups, say my prayers, and then typically use the bathroom. but that's kind of the routine, and I do that just because I try to put an easy win on the board to start the day. Just get the blood going a little bit. You get up and do all that. You're not gonna just go back into bed, right? So you just try to get the blood flowing a little bit. Try to get a very easy win on the board, and just trying to get the mental going.
I like that. And as far as kind of like for people kind of starting out, say if you had started this business 10 years ago as a syndicator of large apartment deals, is there kind of advice that you'll give to a beginning syndicator?
First and foremost, don't be afraid to think big. I think that um, it's easy to look at large numbers and feel like it's daunting. Um, but don't, because there's actually some comfort in the large numbers for a couple of reasons. First and foremost, when you go up to those large numbers, you're going to have more professional people around you. You're going to have more professional team members. So the property management company that you hire is going to be more professional. You're going to have somebody who stays on site at the property, who's the property manager. You're going to have, professional contractors who are handling the work. So you don't have to worry about some of the challenges that you face dealing with maybe a 3-unit building or a 5-unit building or whatever. So I think there's some scale that comes there, and the professionalism jumps up because you're dealing with people who this is what they do all day, every day, and they care about the reviews. They care about what you leave on Yelp, right? So folks who care, they're going to act a little bit differently than somebody who just, they can just get away with it and kind of keep it moving. So I think that's the first piece. The numbers are the numbers. And if you are someone who has worked for a large corporation, it's a very similar thing. I used to run $100 million advertising budget, um, which is not like I was really, spending every single dollar. We were doing large strokes, right? All right, 20 mil goes here, 10 million goes here, 5 goes here. And it's a similar thing. You got to operate at a big level. You can't worry about where $5 went. Somebody taking $5 that they weren't supposed to take. You got to really focus on the macro if you want
Mhm.
to make big leaps, and then hire the right people. That's really the biggest thing is you got to focus on hiring the right people to do the job. So I would say that's really the big thing is don't be afraid and make sure that you look at it from a macro standpoint.
Awesome. Yeah, great advice, John. Kind of, I always ask my guests, kind of to end the interview is what are they most grateful for?
Man, I'm most grateful for my family, but I know I'm sure a lot of people say that, but I would say patience. I like to say that I'm patiently aggressive. And what that means is it's taking the steps on a daily basis and going through the routine and putting in the work, but recognizing that, it may take some time for the results to catch up to the work that you've put in and just staying focused on that. Keep putting in the work. And I used to wrestle, and when I wrestled in high school, I lost every match my freshman year, man. And every match, if somebody stepped across from me, I lost. And it taught me a lot because I was a good wrestler in middle school. And I don't know what the heck happened in high school, but ultimately, I ended up finishing as one of the top wrestlers in school history as far as number of wins. And the takeaway is simply just put in the work, just show up. I just showed up. That was part of it. Part of the reason I got my name on board. I just showed up more than most people showed up.
Mm.
If you show up and keep doing the same thing every day and put in the work, eventually it's going to crack. Now, obviously, you want to expedite that process a little bit, and there are things you can do, but showing up is a huge component to it. So I'm very grateful for the resiliency that I've learned both on the mat and just through other aspects of my life to just know that, hey, tough times don't last, but tough people do. So just show up.
Yeah, I like that a lot, John. Brother John, thank you so much. I really appreciate it. How do we get in touch with you?
All right, Dwayne, you can hit me up via email, john@casmoncapital.com. And then if any of your listeners are interested in just kind of getting a sense of what a deal package looks like, we actually have a free sample deal package on our website right now. If they go to casmoncapital.com/sample deal, they will get a free download. They'll also get tips and more information from us. But they can check that out at casmoncapital.com/sample deal.
Sounds good. Thank you so much, John. I really appreciate you taking the time and have a good week.
Thank you, Dwayne.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.